Well, oil's drop today was partly fueled by a surprised output increase from Saudi Arabia, and that makes the growing list of worries for big oil even longer. Bob Pisani explains.
Oil was down again today on concerns Saudi Arabia may be throwing in the towel on cutting its oil output. It's the latest in a long string of headaches for big oil. Saudi Arabia indicated to OPEC that its production had increased to just over 10 million barrels per day in February. Now, that was a little bit more than in January, but the Saudis said it was still within its agreement with OPEC. But the market brushed those comments aside, and oil barely budged, showing the market clearly believes that there are cracks in the Saudi commitment to cut oil production. Now, that adds to the long list of crude's troubles. There's got a growing number of U.S. rigs drilling for oil right now. We have higher crude oil inventory levels. And now the prospects of a Fed rate hike, that might take the dollar higher. That would almost certainly hurt oil prices. So oil stocks are getting hit hard again, of course. ExxonMobil hit a 52-week low. That was last week, was down again today. Earnings for Exxon are expected to increase 60% this year. Much of it's predicted on oil trading closer to $60, not $47, where it is now. There's another headache for the Saudis, and that's Aramco, their national oil production company. They want to take it public next year, and it may be the biggest IPO ever. They were expecting it to be worth more than $2 trillion, but with oil dropping, it could be worth a lot less. Now, seen in this light, it might make sense if the Saudis started to question the point of continuing with production cuts. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.